Good evening, everyone. Welcome back. I am not late. The reason why I started it exactly at 9 is because Tannor is not backstage, and we're going to put some pressure on him and see if he joins before. Oh, he joined. He is officially here. He is officially on time. I wasn't going to risk it, but he is on time. And once he gets his camera on, I'll bring him to stage. I was sweating it out. I was like, is he going to make it? Is he not going to make it?
Bro, I wouldn't have ran up the stairs because I was so surprised. I was like, he's going to start calling me. He's going to start.
Nope. I'm just hitting start and going.
No, I appreciate it. I went downstairs to fill my water and then literally ran back upstairs. And I was like, I left my water downstairs. So then I knew I was going to be late.
But you weren't. You made it on time.
All right, I'm here.
So before we go on, everything that Tannor and I say are our own opinions. Please freeze this and read the disclaimer. We have no idea what your situation is. We just do a lot of research. Don't take anything we say seriously. This is for educational and entertainment purposes only. Thank you. So Tannor, this episode has a sponsor.
Oh?
This episode has a sponsor. And is the prototype for something.
Oh, I didn't know that this was on our shared channel. You didn't show this off yet?
No, I have it right now.
You waited for me.
The prototype.
Whoo!
I have two different sizes on the prototype. Now, I walked to Grand Central today and met up with Chef Paul. We got two different sizes for the prototypes. Okay? Baked, fresh, and dunked daily. That is the slogan that we're working with here.
By the way, this is 100%. I said our channel. I meant our show. This is 100% Steve's cookie. Okay? Not my cookie. I'm not involved in this. But
now,
I feel honored to be a part of the...
We're in talks about doing something with cookies. We're in talks. So I'm dunking it right now. I have not had one yet. And we're going to see how it is. I'm so excited, by the way.
You haven't tried it?
No, I waited.
You didn't go home and try one?
Nope. No.
So what if you don't like it?
They're freaking amazing.
He's just seeing
freaking amazing.
Millions of dollars in his head right now.
I don't think that he needs to change anything at all.
Well,
wow.
I assume they were baked today. So the next thing would be, what does it taste like whenever you eat it a week from now?
And that's why we're not eating all of them tonight.
All right.
Wow.
You enjoyed that?
That's really good.
When do I get my first box?
All right. So I teased it on something else. Chef Paul and I are considering starting a company in the baked goods. So we will see what happens. But that was freaking phenomenal. Freaking phenomenal. More to come on that.
A cookie dough.
More to come. Anyway, Tannor, big day today. Big day.
Yeah.
Jensen went on Rogan.
Yes. And I'm a partial listener. I've only listened to a portion. But
the fact that Rogan freaking said to him, "You're basically starting Skynet," is awesome.
I don't think Jensen was wanting to have that conversation.
He did not want to have that conversation.
Yeah.
At all.
but you enjoyed it. What did we learn? So I didn't see the whole thing. I've only seen pieces.
I'm halfway through.
Okay.
It was amazing, though, from what I watched so far. Now, there was a clip on CNBC. Do you mind if I play something real quick to start this off?
I would love you to.
Okay. Because I got to tell you, two things I heard today on the way into the office really hit home. And one of them was with Josh Brown. Like, this is just, it's a no shit moment. Okay. To make sure we share this with, I don't even think I shared it with Sam. God damn it. Rookie mistake.
Got to send it with the tab only audio on.
Yeah, I know. I did on the other one. All right.
And I know how badly people want there to be a new narrative. I know how sick and tired people are of seeing the same 10 stocks at the top of the leaderboard quarter after quarter, year after year. And I understand how people went overweight, healthcare and energy and staples and some of the other areas that started to rally in late November as the AI story started to get a little bit shakier. But like in the end, these are the biggest, most liquid stocks, and contra the bubble narrative, they're not even expensive. Meta is a 22 times forward PE. Like, what are we talking about? You're going to tell me Costco at 45 is cheaper?
Boom.
He's been watching the Cookie Man, the
Boom.
Milkman.
He sounds like me.
He does sound it. He's got the accent and everything. He sounds like a New Yorker.
Well, he is a New Yorker. He's a Long Island guy.
Yeah. You guys are going to look alike soon. No,
but
I'm
I
kidding.
mean, he's 100% correct. Downtown Josh Brown.
Here's my problem, okay? And I love, like, if I were to show you my Spotify recap and everything, the Compound and Friends, high up on there. I think it's the second most listened to podcast for me under, like, JRE or something like this.
Okay.
However,
I
listened to this guy 2 days ago talk about how the Mag 7 is not everything and that he needs to diversify into healthcare. And he was looking at, what is it? Allegiant? Is that it? Ticker symbol A?
I don't know.
Agilent? Something like that? I literally remember because we did a deep dive. Well, not a deep dive, sorry. But I brought the ticker up and I was looking at the company's financials and everything. And I was like, wow, I would totally not invest in this business. I would just invest in the Mag 7. Whoever was on my live stream like a couple days ago, you guys remember this. And now he's back to saying you don't need to invest in healthcare. You invest in Mag 7. So a little bit of a talking head right there. But, you know, I do agree with that statement a lot more than you needing to diversify into other sectors. That's for sure. I'm going to push my plant over. It's bothering me.
His plant over. Anyway, I agree 100%. With what he said. Shit, I'm not even sharing it anymore.
Yeah, is the second cheapest stock in the Mag 7. It's got a forward PE now at 24. And I understand all the stories about competition, et cetera, not dismissing that. But again, this is the best company on earth, and it's 24 times forward earnings, a multiple you have never been able to pay for a name with execution at this level. So I really feel, Judge, we had this huge momentum swing on November 20th. Only 4.6% of all the names in the XLK sector spider were above their 10-day moving average. Today, that's 86%. That's the highest since July. These names are being accumulated. And I feel like second verse, same as the first. Everyone gets how this year is going to end. I know people want a different narrative. I just don't think you're going to get it.
He's basically quoting me, is what he's doing. He's basically quoting me. I'm joking.
Especially
about
Costco
that.
as the main call out.
Look, I'm obviously joking. He's not quoting me, but
you're going mainstream.
It is a breath of fresh air when I hear other people have the same narrative, because once again, who the hell is competing with these companies? Seriously.
Against NVIDIA?
Just in general, like, do we really think Apple is going to lose its 2 billion install base?
Yeah. No, well, no. I mean, no, I agree with you. But, dude, I'm buying Meta here. You know, like I think it's funny. Whenever the original sell-off happened and it fell on earnings like 12%, I remember buying it like 680, like 683 or something. And I was like, this sell-off's not gonna last. Like, this is cheap. And then it continued to fall. And now that it's rising back, people go, oh, I missed the bottom because I didn't get under 600. But if we never got under 600 in the first place, you wouldn't even think that that was possible. Like 640 is still like a blessing, you know? So I'm very happy there.
I think Meta is so undervalued that it does not make sense where it is. And sure, maybe people didn't get it at the bottom, but that should not be a deterrent from making investment decisions, because I got news for everybody. It is next to impossible to call the bottom on things.
Yeah.
So I still like Meta here. I really like NVIDIA here. And I do think that big tech is just going to get bigger. And the theme for the rest of the year and 2026, along with other ones, but the main theme is going to be don't fight the Mag 7. It's not worth it. Just like don't fight the Fed. Don't fight the Mag 7. How are we going to fight an unstoppable force?
Yeah. Yeah. I called one bottom so far.
Okay.
Not in my lifetime, but recently. Chime. When are you going to get on the train?
I'm not.
They had a very good fireside chat today.
Okay.
They are like a little mini, and it's funny because I say mini because they, like, if you look at them in the App Store, they rank very, very high. But it's a pretty oversold name. We're talking about an $8.4 billion fintech that is moving very quickly, bringing on new users. Those users are sticking around, going direct deposit, all the things that you've seen at Block or, you know, SOFI or, you know, a lot of these other fintechs that maybe you like. How can I get you there?
You can't. So don't.
What do you need to see?
I'm not interested.
You want 30% growth?
I'm not interested.
All right. All right.
I don't need another fintech. I have a lot of SoFi. I don't need another fintech in my life.
You no longer like making any money. Is that what you're telling me?
I mean, listen, is it going to be easier to make money in Chime than Microsoft?
I mean, I don't know,
dude. Is it going to be easier to make money in Chime than Amazon?
It's been exactly 1 month. I'm up 30%.
Okay.
So
I have a lot of SoFi. I really don't need another fintech. I really just, if I was going to do another fintech, it would be Hood at this point.
Hood?
It would be Hood at this point.
That's fair. The only difference is that Hood, whenever you're looking at the market, is historically expensive. Whenever you're looking at the market for Chime, it's like historically cheap. That's the only difference.
Okay.
By the way, I'm not talking to the audience at all. Like,
No, he's talking specifically to me.
To you, okay? I know your risk tolerances. I know your time horizon. I know your like. You've got a very, very, I was going to say thick stomach. I'm not trying to say that. I'm trying to say iron stomach.
I know what you meant.
Yeah. You can handle thick skin. That's what I was trying to say. Thick skin. I mixed it with iron stomach, and then I said a rude comment. What's it called? You can handle the Chime volatility. You want an investment in Chime. Not talking to any of you guys, by the way.
No, and I get it. But the problem for me is that when I think about taking ETFs out of the equation and just the individual positions that I am in, SoFi is a decent percentage of it. And
I didn't call Steve fat, dude. It was a
get him. No, he did not. He didn't, guys. I knew what he was trying to say. Trust me.
just digging myself a hole here.
You know, SoFi is already a big portion, and moving into Chime, something that I don't follow and something that I just don't have an interest in following. It's not interesting to me to go do the research.
Yeah, but that's like your favorite thing to do. You don't even like watch movies or anything anymore. All you do is research.
I know, but it's not on my list of things to research. Like, there's so many other great companies out there, and at this point, I'm not necessarily looking for a quick hit. You know, I have my new spec play. My new spec play is QXO. It's already at 20, and I think it's going to do really well next year. I'm not looking for another thing that is going to be going against the grain. So Chime may work out very well. I don't want to research it.
That's all right. All right. You know what I like so much, like what keeps attracting me to Jonathan, thank you so much, brother. More Vertiv. Do you know anything about this name?
This is the HVAC company that does liquid cooling and stuff.
That's my understanding. Yeah. And it's sort of a data center play now.
Yeah, no, it's a great company. It's like them, Johnson Controls, Eden. I think there's a lot of room for growth in those companies because I do think the CapEx expansion is going to continue over the next several years. So I think that these are also companies, it's not just one and done because they're going to be selling service contracts, there's maintenance, there's replacements. So I think it's really good.
Thank you, Jonathan. I'll put that in the community port. Yeah, it's also an S&P 500 candidate.
So you want to transition S&P 500 candidates?
Well, I will. I just quickly want to say what attracts me so much to fintechs, because people often say that I'm just the fintech guy.
You do love fintechs.
I do, but you know why? There's a real reason why, and that's because they're easy to understand. They're so easy. The more assets that you have on their platform, the more money, whether you're transferring it internally or externally, there's money to be made, right? Even the company like Hood that cuts its fees all the way down to the bottom is still one of the most profitable names. There's so much money to be made in fintech. That's why I like it. It's profitable and easy to understand. I find healthcare like so unbelievably hard to understand. Not because I can't get around like him selling erectile dysfunction pills. Like I get it. It makes
but that's not healthcare though. HIMSS is not healthcare. Healthcare would be Unite Healthcare, Oscar, that type of stuff. HIMSS is more a pharmaceutical company.
Okay, like I said, I don't know much about this industry, but I would put pharmaceutical and healthcare under the same subcategories.
Two separate things. One sells drugs. One is a healthcare provider of insurance. Like two different things.
All right. Well, I don't like pharmaceutical names then. That'll be my correction. What I don't like about pharmaceuticals is some random biotech coming in and just wiping out, some company's advantage because they found some, breakthrough formula. That scares me. But I don't ever see that happening in finance. Like I don't see that happening in fintech.
I've never been a biotech person for that reason. And I own 3 pharmaceutical companies only because of how big they are and they look undervalued. I don't have time to understand the phase 3 stuff and the pipelines, but Pfizer, Bristol Myers, and AbbVie, I mean, to me, those are easy to own. That's just me.
Dude, like even someone says here, Novo Nordisk equals weight loss pills equals easy to understand. I don't agree at all. Like look
Nordisk got destroyed the other day.
Yeah,
Didn't
look
it?
at the stock. That's not easy to understand at all. Like there could be pricing pressures. The government comes out and says that, you know, these things can't or these things can't happen. There could be a report that comes out that says, oh, you know, for the last 20 years that you guys have been taking this medicine, it's actually terrible for you. The government came out against Tylenol recently.
Right.
Like that is hard for me to understand because I don't know the chemical formulas or anything like. So it's not that I don't understand Tylenol, but I don't know what I don't know. And there could be some future thing that comes out that just is a black swan event to an individual company. That scares me.
It's one of my least favorite sectors.
But fintech, especially ones that have bank charters, that I feel very insulated and protected in those names.
You mean like SOFI?
Like SOFI. You can go ahead and transition us.
You mean like SOFI that, you know, may or may not get into the S&P on Friday. So do we think SOFI's getting in to the S&P?
I've said I'm hopeful for it, but honestly, someone put it at like a 15% chance, and I'd probably have to agree. Like, I don't know if it's a high chance that they get in. There are bigger names, and there was sort of a stint in the last couple of months where they're adding financial after financial after financial, and people have kind of gone to say, "Oh, this means that they have a real big appetite for financials," but they are dealing with that appetite already. So I don't know if they still, like every time that they add a new company in the financial sector that isn't SOFI, that reduces their need to continue to increase their investment in financials. So, and by the way, I'm talking about names like Block, like Robinhood, like Coinbase. I think there was another one as well that recently got in as well. They've definitely added a lot of fintech names. I'm not just talking about Datadog and stuff like this. I know there's other names that have not been. What was the most recent one that just got in?
I have no idea.
It was oh gosh. It just happened like a lot, like last week or maybe like 14 days ago or so.
So I don't think that
SanDisk. IBKR just got in. Sorry, last one. IBKR just got in as well. Every time that they add these new companies, it reduces the need to bring in new companies.
Yeah, I don't think SoFi is getting in this quarter. I think it's going to be sometime next year. And I know that there were some people posting on X that wanting the voting members was a Goldman Sachs guy with Noto, blah, blah, blah. I don't think that matters. I think that they're not getting in until second half of next year.
Why so long?
Because I think that they need a couple more quarters. How many quarters was Hood profitable before they got in? They didn't get in on the fourth quarter or fifth quarter, did they?
No. We can check fiscal AI. By the way, you're such a champion.
Why?
Because you had put out my promo code on your video, which you did not have to do.
Well, I don't have any promo code, so I might as well promote yours.
Which, I mean, I appreciate, but
in fact, throw it up right now for everybody.
No. I'm not. I'm all good.
Tannor,
we've gotten enough people.
Fiscal AI. If you would like to use Fiscal AI, you should use this promo code. Tannor, where is it?
It's future. It's Fiscal AI /future.
Let's copy it and put it in the chat.
Okay. When did they get in? They got in Robinhood got in Q2. So, well, I think they got in Q3, but Q3 results weren't out yet. So they got in after 8 quarters of profitability. Robinhood did 8 quarters in a row. Okay, maybe you could say that this was actually the part, because you don't need 4 quarters of profitability. You need trailing 12 months to be you know, fully like equal. So we actually, by this point, because the 157 was enough to outdo the negative 85, they were profitable by Q4 here because it was so profitable. Does that make sense?
Yeah, I don't think they're getting in.
Well, let's take a look. So let's imagine that it started here. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 quarters. And then we go to SOFI. They've been profitable for 1, 2, 3, 4, 5, 6, 7, 8. Ooh. Maybe we're a quarter shy.
Maybe. And if you would like to use this product, Tannor's link is posted on the screen.
I'm not even giving this company any justice here, but you cannot find an all-in-one platform at this cost that updates as fast as it does and gives you segments and KPI. I feel salesy right now. I'm done.
I will say
just
that
genuinely.
I think Seeking Alpha is the best site for research, in my opinion, from an overall thing. Fiscal AI does update quicker, without a question.
It updates instantly.
Yeah.
Like, because they use AI, like you know what they told me? I was sitting down with them. I'm not trying to be sales pitchy here. I just want to tell you guys what's crazy about the S&P and Bloomberg and stuff.
See, this is what he basically just said, I know people there.
I do know people there.
There you go.
I know the CEO there. Like, I'm not hiding that fact. To be honest, I'll be very honest with you guys. On the promo code side, we're doing very well. They love me there.
They love you there.
They love me there, and I love them there because everything that I've asked them to enter into the product, like if there's been a missing product, I've told them to add it, and they've added it. So, if you guys have any suggestions that are like, hey, this is not like we need something new, or you have some suggestions, legitimately let me know because they will put it in, like, for real.
Tanner's got people for that.
Yeah, no, they're great. But what I found out, like, what's it called? Not is it Cap Intel? What are all the ones? Anyway, they all still do like manual data entry, and companies like Bloomberg and everything hire hundreds, if not thousands of people, usually out of the Philippines, to just, whenever the reports come in, they know their shift Fs, and they go to the certain spots through the 10Qs and the 10Ks whenever they get in the SEC filings, and they manually data enter everything. That's legitimately how all those platforms are still doing it. And Fiscal AI uses Gemini, Google's product, so that's a little bullish on Google. And they say, hey, these are all the things that we're looking for. Please sort them. And then they have like back testings to make sure that it's, accurate. But they're the first ones that are actually using artificial intelligence. A lot of it is still manual data entry. I find it crazy. But Googs.
Well, there is something I want to discuss today. Did you see Skrelly today?
I heard about a short position. I didn't hear of anything else.
A lot of people are asking about in the chat. So one of my buddies follows him and calls me in the mornings like Skrelly's about to get liquidated. I'm like, what do you mean? Supposedly he went very short. I mean, a huge short position on Capricorn Therapeutics, and it moved 371% today. The stock went from $4.64 last week, and it is up to $29.96. And supposedly he got liquidated. I have no idea if he did or he didn't.
Like his whole portfolio?
I don't know. I don't have any information on it, but supposedly that is what happened. Now, his stream today, he basically just sat there and was pulling his hair out. So I have no idea. That is all I know. If anybody actually knows what happened, put it in the chat. But that is the news I heard.
Gosh, man. I haven't seen it.
And once again, that's why I will not short or go against companies, because it's bad karma, and that kind of thing will destroy you.
And he knows that industry well.
Yeah. He's become a farmer, bro.
He hasn't become a farmer. He
Here
is
we go. Watch 30 minutes of him live streaming and determine he's a sociopath and doesn't actually know much of anything. Can't surprise him. Okay.
I don't endorse that message. I'm not here to go after Skrelly. I mean, but
Oh, I'm not going after him. I'm just saying that shorting things is not freaking safe. Like, look, he obviously did not have inside information, so you don't know what this company can come out with. Like, it's a freaking biotech company. They can come out with great news, and this is how you get hurt.
yeah, it's really not an industry I know at all. But luckily, you don't need to play every hand. So, like, I see those companies pump or dump or anything like this, and I just let other people have their fun.
Yeah, I don't do that type of stuff. It's crazy.
Yeah. No, I mean, it's funny. I think there's a lot of complaining online about like prediction markets, but like no one cares about the fact that you can just hop on and short a company with leverage. It's
or
like,
you can go to the casino and lose your whole bank account.
well, people do care about that. There's definitely people that people are anti that. But did you see the SOFI post? Here, wait 1 sec. Let me see if I can bring this up. They had not only commented on prediction markets, but sort of said it in a way that.
Oh, I did you see the video today about
No.
it? From Stifle?
No.
Oh, their CEO went after Robinhood today. Show what you want to show, and then I'll bring it up.
This is from SoFi. They weren't going after prediction markets. They kind of just said this. This person asked them, if they're ever thinking about adding prediction markets. They said, we've evaluated prediction markets and see some potential in how they could help people engage with markets that impact their money. It's an interesting space, but we can't share a timeline at this stage. Not can't share a position, not share a timeline. Like if I was to say, hey, Tannor, are you going to get into hard drugs and gambling? I wouldn't say I can't share a timeline. I would say, no, I'm not going to do that.
Look, as a shareholder, I would like for SoFi not to do prediction markets. I don't want it on the platform. Personally, I don't think it fits their brand.
What if they stay away from sports prediction markets and they stick to specifically financial markets? Because they said prediction markets that affect your money, Fed rate cut decisions.
I wouldn't mind that as much. Like if they kept it purely economical, where you could buy contracts on rate cuts, on what CPI is going to come in at, that type of stuff.
Yeah.
I wouldn't have a problem with it. The way I framed it with Amit was, for Robinhood, it fits their brand, because their brand, even though the brand is evolving, started out as, let's be honest, a meme stock company that you just bought meme stocks on. Then it started out as a trader, and then it became a company used for options and leverage. It has evolved way past that into an amazing company, but it still has an image to many people as that. And putting prediction markets on it, nobody is surprised by it, because it evolved from a company that was more stretching the limits to a full financial service company. So it fits their brand well. They're also not a nationally chartered bank. As a nationally chartered bank, I don't think SoFi should do it.
That is fair. I don't know. I see some options, or I see some prediction markets that come up, and to me, it's not even a gamble. Like, I mean, it is a gamble, but I just have such an advantage in those types of markets. So the one I'm referring to is Polymarket announced, and I can actually pull this up. Give me 1 second. They have prediction markets on earnings. Will a company beat EPS projections? So you can go to Polymarket and see their earnings calendar here, and this is for tomorrow. So will Rubrik end up beating 17 cents of EPS? Right now, the market says 93%. Okay. I'm not smart enough on Rubrik to know if I would take that bet or not, but the chance for SOFI, I remember looking at this. The chance for SOFI, whenever I pulled up the contract originally, said, will they beat 8 cents of EPS? 70% chance. A 70% chance that they were going to beat 8 cents of EPS, which by the time that earnings actually came around, Wall Street upgraded that to 9 already. So consensus was actually above the prediction market. Okay. And yet at the first time I saw it was at 70, and then it raised to 80%. So even at earnings, it was an 80% chance. We came in at 11 cents. You're asking me, a guy that looks into SOFI a lot, is SOFI going to miss for the first time in company history? I mean, it's a no-brainer. And the fact that that was like over a 40% upside for me, going from, 70, I don't know what the actual number would be there, but like it's something like 40-something% upside to bet if SOFI was going to get more than 8 cents of EPS. I mean, come on, that's free money in my eyes for my advantage, for my information that I'm looking into. I'm not a sports guy, but that one was interesting.
And I'm not saying that it shouldn't exist, and I think there is a place for it. But to me,
not on SOFI.
Yeah, the place for it's on Polymarket, not SOFI.
But you can get margin. They're pushing into crypto.
And I don't.
Crypto not worse than that.
But crypto is looked at as an investment. A lot would look at it as gambling, and I get that. At the same time,
it's not a 30% upside, guys. It's 70 to 100 is 30%, but the increase from 70 to 100 is, someone will say, it's like,
I would rather SOFI be looked
%.
at between SOFI and Robinhood as the one for banking, other than other things. Where it's just my preference. So listen to this. I think you're going to find this interesting.
Okay. Did you stop talking? Oh, okay. Sorry.
Steve, good to see you. It's been a while.
Not that long, but
I could.
a while, I bet.
Longer than we like.
The opportunity. Speak for yourself. No, the opportunity. I was looking for you out in Utah. All your minions were out there, and you weren't there. But okay, so the opportunities for gambling are everywhere. I'm not sure what you're talking about here. Prediction markets, DraftKings, crypto.
Well, it's all of it, but
You didn't see this, Tanner?
No.
Okay.
Options. I just heard of perpetual futures.
well, you know what? Zero-day options and perpetual futures were the beginning of this, and now you have prop bets and prediction markets. And my concern is that if you can pull an app out and in one sleeve buy stocks, which, by the way, if you buy a stock, everyone can win. You're investing in the U.S. economy. They're going to be a loser.
Right.
Or you pull it out and you bet whether the coin toss is going to be heads or tails. One is compounding. Investing is compounding, and gambling is consumption. And they are completely different things. And if we, as a society or us as an industry, we need to educate the difference. Because this has been a gray zone, regulatorily, taxes. These prediction and prop markets are getting a little out of control.
I share your concern with this, but we also sound like old fuddy-duddies who don't want these new ways of bringing new consumers in. Even the SEC chairman who we had on yesterday said it's all manageable.
The hell happened?
I don't know, but hold on a sec anyway. I don't know what happened, but that is like I've got nothing against what they're saying. I'm not even saying that it's not gambling. Like But this whole idea that buying stocks and prediction, like no one thinks that that's the same thing. We're all aware of ownership in companies versus a bet. But you're going to stop an adult from doing what they want to do with their own money, and then he says, "Oh well, it's the amount of buttons to press." Like if it was a 6-step process, then that would reduce my risk. Like, who cares? Go ahead. You can continue to play it.
Was, but
Yeah, so go ahead. What you were saying was.
Well, no, I think that, look, if you get a teacher and kids saying that the way they're going to save in their 401k is through gambling, I assure you that we're not fuddy-duddies, okay? Gambling is consumption.
No one's saying
you bet
that.
one way, I bet the other, the house takes
It's a zero-sum game.
Well, not only a zero-sum game, it's negative return.
It's negative, right.
Yeah. So I think, look, I don't want to be a fuddy-duddy about that, so to speak, but I do think that when you have parlays and bets and so easy and dopamine versus compounding, compounding is boring, dopamine's exciting. We as an industry need to make sure that investing and gambling are different. You want to gamble, go to Vegas.
What do you think of Robinhood?
Well, I think they're mixing the lines between gambling and investing, and I think that they can run their business model. I could put prediction markets up on our app. I'm not going to do it. That's not what we do. And open a casino too. So we're not going to do that. We believe that our job is investing. Can you imagine 100?
Now, here's the problem I have. That may be well and fine today, but in 10 or 15 years from now, that could come bite him in the butt.
It will.
Because there's a lot of people on the younger generation that want everything on one platform. And I am fully on the idea of let adults do what they want to do. I am not against gambling or anything like that. Okay. I am a true libertarian. At the end of the day, I do want some separation where I have a different app for that than I do for my investing in banking.
Yep.
And that's where I'm on the same page with them. Now, I'm not saying that is the right move, because in the future, it could absolutely be the differentiator between where people move their money. And we should not be telling people what they can and cannot do. I just think that at the end of the day, having it on 2 separate apps is probably a better idea. And I would rather SoFi just not get into it. I do recognize it is a large revenue generator. I do recognize it could be a lead for invested capital and all those things. There's a lot of benefits. But I think when you cross that line, other people may take it less seriously as a place to put money for long-term investing. So I don't know. I have mixed feelings about it.
Yeah, but what about short-dated options that's allowed on Robinhood, SoFi, all these places?
Short-dated options, you're still making an investment based on what you think is going to happen with investing. And I get what you're saying, because on gambling,
I don't know about all that, dude. There you can do prediction markets on what you think a company is going to do.
Most prediction markets are sports gambling. They are not betting on earnings. You're going to be one of the oddballs out on what you're actually using this for. Like, you have to admit that the majority of prediction markets is not somebody betting if Apple's going to beat earnings or not.
Well, this is the thing. I'm not talking about, I actually do not want, I want SoFi to get into prediction markets. I do not want them to get into sports gambling. So this will be my prediction. I've said this for a while now. Prediction markets is going to 1,000x.
100%.
Like,
I think it's going to.
And I genuinely mean 1,000x.
Like, DraftKings is screwed.
You know, there's going to be long dated prediction markets. There's going to be extremely like parlay type events and all of these things. Like, it's all going to be there. If one person says yes and the other person says no, they can decide if they want to bet on it and determine a price as a market, you know? But I don't think that like, even though the majority is there, I still don't think that SoFi should get into prediction or sports prediction markets. However, if I was looking to make money in the markets, prediction markets, similar to crypto, and everyone that's saying no, honestly, you guys are 2017 investors whenever crypto was taking off. You need to realize these are additional tools to an investor's toolkit. I could have made, I looked up that it's 42.8% is the rate that I would have made if I would have put my money on that, on SoFi beating EPS. But that wasn't available in my brokerage. I would much have preferred to play that tool than purely buy shares or buy short-dated options on SoFi. It would have been much cheaper. Even the purchase, the contract purchase. I can buy as minimum as $1, as much as I want. The cost is a single penny. I don't have to pay contract fees, minimum of 100 shares of, like, I don't know what an expensive Mercado Libre or something. 100 shares of Mercado Libre is what, 200 grand? So it's not very flexible for everyone. I think that those types of financial prediction markets is a great fit into Schwab, into Robinhood, into SoFi, into all brokerages, to be honest. But it is gambling. I'm not saying it's not. But some people like to trade, and that should be available on brokerage. Also, hedging. What happened to hedging? We got a lot of SoFi investors here. A lot of people who are all in on SoFi. What do you do whenever the chance of rate cuts potentially starts to grow? Do you sell all your SoFi, or do you hedge your position with a small prediction market saying, you know what, the Fed will not cut? I'll make, I could put my money on the 11% chance of the Fed not cutting and hedge a pretty decent amount of SoFi that way, because it would be essentially a 10x if I get it, if the Fed chooses not to cut this quarter. Would you not do that, Steve, to hedge your portfolio?
Nope.
I think you're.
I don't hedge.
All right.
I don't hedge.
That's fair.
Wow. Did you see this? Robinhood received more than 1.4 billion of transfers during their match promotion for Tesla stock. The average account size was 500K. Robinhood is becoming the platform for people that have $5, 5,000, 500,000, 5 million, 50 million, and 500 million worth of stock.
That part was not Robinhood's release.
I didn't say it was Robinhood's release.
Well, Robinhood did put out everything you said before that. The 1.4 billion and the 500,000 was part of Robinhood's press. Yep. That extra part, I think, was a myth.
And the extra part, and I know why he did it, and you know why he did it.
Yep.
I'm not going to say why he did it, but
yep.
All I will say is I personally know it is not an untrue statement. That's all I will say.
You mean on the account sizes?
I'm just going to say I personally know it is not an untrue statement.
Yeah. You're being pretty vague. I think you could say what you want to say. You're not giving any identity.
But I don't want to actually say it.
All right.
I'm just going to say that.
You know what? I think I've said it previously in my life. So can I say it?
I mean, if you want to say
I've said it live.
Don't bring me into it, but.
No. I was at the Robinhood Gold event, and they were talking about somebody there who was wanting to transfer $500 million to the Robinhood brokerage. And they had, we're talking about how they were like going to get a team to go talk, to that person to potentially help them onboard a $500 million customer. I think we talked about it on a SoFi Weekly as well as some other podcasts, but Yeah, they have some very large customers.
They have some very large customers.
Yeah.
So, yeah, Hood is getting a lot of capital coming in. I did not know it was 1.4 during the Tesla stock thing. And I got to tell you, I've thought about moving to Hood, to be perfectly honest, because of the match.
2% match.
It's free money.
What I said in my tweet, I said, you know, you're going to come for the 2% match, but then during the 2 years that you have to stay there, you're going to see all the new products that they end up coming out with. You're going to have a great user experience. You know, like there's probably going to be other promotions that are going to incentivize you to stay or double down in that platform while you're there. You're going to stay after that time limit expires.
So I want to address something, because Investing for Freedom said there is no free money.
Mm-hmm.
It is free money, because if I told you how long I've been at my current place, however long I have to lock up the money for, it does not matter. I've already been on my platform longer than I have to lock it up for. So if I move it, I'm staying for the whole time. So yes, it is free money.
Yeah, it's not that Robinhood's not going to make a profit on you, but you were going to make a profit at your old the old brokerage that you were with was making a profit on you as well. So the fee structure doesn't change too much. In fact, for margin and other tools, they're actually much cheaper. For options, they're very, very cheap. So like in that regard, you're probably saving money by switching over. And for Robinhood, it's actually just a customer acquisition cost, right? They will depreciate it out over the 2 years that they know that they have you for. And they'll say, okay, well, how much money are we making on the average customer that we do this for? And they've been doing this for a long time. They clearly are seeing positive economics every time that they do this, because customers say, oh, I'm just going to bring over my ETFs and I'm never going to touch them. And then you start playing, and then you buy your crypto there, and then you know, get a credit card. Like there's clearly they know what they're doing.
I already put myself on the waiting list for their credit card.
But yeah. Are you going to use that credit card?
Absolutely.
Okay.
I mean, I'm thinking about calling up the place I'm with and asking if they'll give me 2% to stay.
And that has definitely been there has been some discussion about that. I've heard some people that said that they stayed after getting paid.
And if my place pays me, I will stay, because it means I don't have to do anything.
And honestly, guys, if you guys want a little bag, like potentially threaten to say that you're going to move.
100%.
You know, and then you don't even have, if they call your bluff and you don't want to switch, that's fine. But at least you tried. Some of you guys are going to get 1% to 2% by even making that phone call. So
probably.
That's hey, 2% of 500 million is a $10 million payout
For doing nothing. For doing nothing.
And Robinhood is happy to pay it.
And what's crazy is the other side was not willing to do shit.
Now you're starting to attach yourself to.
Just saying.
Okay.
But yeah, I am seriously considering moving, only because I'll be on the platform for a very long time. So I don't mind freaking having to have assets on there for a couple of years. So, you know.
Yeah.
We'll see. And then if I do that, I probably have to invest in the company, right?
You have to invest in the company.
Like if I do this, I'm going to have to invest in the company.
You'd fall in love.
Yeah.
Yeah, no, Steve has not brought over his 500 million. Steve still has to bring over his 500 million, but
I wish I had 500 million.
Yeah. At the top of the App Store right now, actually, we need to check if it's still there, but Shopify was #1 today in the morning. after Black Friday, Cyber Monday.
Okay, this is a good idea. I move my assets over to Hood. I take the 2% and I use the money that Hood pays me to invest in Hood.
Oh yeah.
So technically, I never put my own money into it.
That's how they should give a payout. They should actually start giving 3% payouts and then but pay in kind with Robinhood shares. Maybe some people will continue to hold it. Who knows? No, that probably falls under some legal problem, but
Yeah, because then they would just issue shares just to give them out.
can we talk BM&R?
We can talk BM&R.
Are you making any changes to your position
I bought more on Monday.
after they raised more cash and bought more Ethereum?
It was either Monday or Tuesday that I bought more. I don't know when I did it. I think it was Monday.
No, it looks like they just made a big purchase yesterday as well, about 150 or so million of Ethereum, just based on what we can see on chain.
We have the upgrade next week, right?
No, it's happened.
Oh, it happened.
Yeah, it happened a few hours ago, 4 hours ago.
And is that going to do anything for us?
It's controversial. So I guess the controversy is, one, it's going to lower the burn rate because the fees are going to go down because they're charging less.
Okay.
But the Jevons paradox of that is that, okay, well, if you lower the fees, maybe 5x the amount of transactions are going to happen.
Right.
So we will see. It literally just happened, though. Like, here, if I bring up this post. It literally just happened at 5 p.m.
Okay.
Fusaka is live on the Ethereum mainnet.
Well, Ethereum is at 32.25, so can't be too mad at that.
Yeah.
Do we think the S&P is getting to 7,000?
I do. Yeah. I'm bullish into the end of the year.
Same here. As long as we get a Fed cut.
As long as we get a Fed cut. What do you think about the potential little comments from Trump about the next Fed?
Kevin Hassett?
Yeah.
We get Kevin Hassett as Fed chair. You want to know where we end up end of next year?
Where?
8,500.
8,500. Okay.
I don't even think it's going to be 8,000. This will be 8,500.
I think people are downplaying the fact that like quantitative tightening just ended 2 days ago. Like we are already. This is what I said on my stream earlier. This is essentially, they have to look at the entire economy in one basket. They have one tool. It's a very blunt object. Okay. It's a blunt tool. They can't make precision choices. They either hit it with rate cuts or they raise rates. The AI trade does not need any rate cuts right now. It's like all the gas is on the fire with or without rate cuts. And yet, because other sectors of the economy are not doing well, it's going to get essentially lighter fluid drowning all over this AI trade just because it's part of the economy. And I don't know how NVIDIA is still being held down with these types of decisions. It's such a broad macro level. And I'm like, what's happening? We're 181. Like, where did we close out at?
179, I think.
179.59. Am I crazy?
Well, NVIDIA is the cheapest stock in tech right now, except for Salesforce. It's crazy.
Like, we're going to get Fed rate cuts. Kevin Hassett comes in. This is going to be insanely dovish. No quantitative tightening. And like, I don't know what Oracle's debt is right now, but there's going to be a lot of companies that can, have a lot more debt if the cost of capital goes down.
Hassett coming in is likely to make us go to 8,500 because he may want rates lower than where Trump wants them. I mean, he may want rates at 2% or lower. Like, I'm just hoping they get to 2.5.
What was the comments that SOFI said about if interest rates cut by 100 bips? Do you remember that?
I don't remember the quote, but I mean, I can tell you what's going to happen with their NIM. It's going to fucking explode.
Yeah. Oh, yeah.
Because SoFi has issued so many loans out when in a high interest rate environment, and as rates come down, the interest they have to pay on their deposits is even less. So their net interest margin expands, which will make banking explode. And the amount of income we're going to generate is just going to be so much, they'll likely slaughter earnings.
Here, can I play something for you real quick?
Depends what it is. What do you want to play?
Just the transcript.
Is it going to hurt? Is it going to hurt us?
No, it's SoFi just from their old KBW thing that just happened back in November.
Okay.
I think it's beginning. All right, great. So can we talk about like rate cuts and how it impacts NII for you guys?
So rate increases.
Real quick, NII is net interest income. Okay, that's not for Steve. That's for just in case anyone doesn't follow SoFi very closely.
As rate cuts, we're able to make adjustments in what we're doing to maintain, net interest income and net interest margin. We're managing to returns, and so we have pretty good data and analytics and testing capabilities to maintain the right types of spreads relative to the risks that we're taking. Declining rate environment is a hell of a lot better than a rising rate environment, and so I'd be super excited to see rates come down.
Wait, sorry, one sec. I lost my. I tried zooming in for everyone and it scrolled somewhere else. I just want to be able to. Sorry, we have pretty good data on that. A declining rate environment. I'm just going to start right here. Sorry.
Declining rate environment is a hell of a lot better than a rising rate environment, and so I'd be super excited to see rates come down another 100. I think another 100 basis points would be gangbusters for student loan refinancing, for personal loans. I also think the home loan business would benefit meaningfully. 200 basis points would be really significant. Our investments will also benefit as rates come down because people will make less on savings.
Cool.
I mean, come on. The Invest platform they think would benefit as people move money from savings to investing and go a little bit more risk on. He said, I think another 100 basis points would be gangbusters for student loan refinancing, and for personal loans, home loan business would do well and would benefit meaningfully. For 200 basis points would even be more significant. Do you think Kevin Hassett could deliver 200 basis points? And what would that do to SoFi?
Yes, because I don't think it was freaking coincidence that 4 Fed members came out last week and all said that there's room to lower rates. It was more a coordinated attack as a big FU to Powell. We know that we're going to get a new Fed chair, and we know a bunch of members already want rate cuts. So I think you're going to see more influence to the downside, which is rate cuts. There's reason to do it. Unemployment's going up. You have debt turning over from small businesses, and you have to make the economy an inclusive environment for not just entrepreneurs to borrow, but for small businesses to borrow and refinance debt without their margins compressing, putting them in a position where they have to lay people off. In addition, you have too many people that have a mortgage of 2.7 to 3.2%, and with mortgage rates where they are, guess what happens? People don't do projects because they don't tap in home equity line of credit. They don't take out a second mortgage, and they're certainly not moving. That means that you don't have the home improvement projects happening. Electricians aren't getting as many jobs. Plumbers aren't getting as many jobs. Contractors aren't getting as many jobs. And you have a housing market that needs more supply. Lower rate environment, builders can tap the debt markets more and build, and then all the trades do well. supply companies do well, industrials do well. It is critical for the economy. And it's going to be amazing when they do it.
Do you think, just sticking on SoFi really quick, how do you think that balances out in this sort of environment where if we do end up seeing slightly worse job loss, I guess they sort of come in tandem, right? If we keep rates where they are, then worse than expected jobs data and not as many loan sales from SoFi. But if we do see rate cuts, then that could mean a better than expected, sort of increase in jobs data, and SoFi ends up selling more loans. So what does this mean for SoFi? Does that mean the business skyrockets and their
their net interest margin is going to expand, and their originations are going to go gangbusters.
Well, why? What do you mean by their net interest margin would expand?
Well, for all the reasons I said about 7 or 8 minutes ago.
Which was what?
They've already made so many loans at higher rates.
Yes. But I thought you meant specifically for new loan. Like the new loans that they write will not be at...
Even new loans that they're writing, they would probably have a larger margin because think about this. And I don't know that these are the numbers. We're just going to assume. When interest rates were at 4.5%, they're paying around 4.5% on their interest. And what are they writing loans at? 8%, 9%?
For personal loans?
Right.
Honestly, roughly still like 12%, 12.5% right now.
All right. So you have 12 to 4.5. Okay. So that's a 7.5 point spread right there. So if rates come down to 2%, and SoFi is able to write personal loans at 10.5%, that's now an 8.5% spread. You just picked up a point of margin.
Yeah.
Because they're paying 2 points less on what they have to pay out on the deposits, and they can lower what they were charging on personal loans, but they don't have to lower it by as much as what they're lowering what they're paying on the deposit to increase their margin. I mean, this could be really good. And then you compound that with more originations. I mean, winning combination.
Yeah, that's really interesting. And then the whole time we continue to, collect more and more deposits. So they can end up fueling more loans. We're at the highest amount of capital ratio that we've been at since we originally got the bank license at 20%. So they have a lot of fuel to continue to put into new loans.
And let's not forget, mortgages were very low already. Wait until you get a low environment where mortgages actually see originations. SoFi is going to do very well.
So, you had a price target. I don't want to get you and Tim Sweeney confused. Your price target for next year was what?
I don't even
50?
remember. I don't even remember what I said. I think Sweeney Sweeney was more bullish than me.
Yeah, I think he said 60.
I think he said 60. I said 50.
Yeah.
And I said 50. Granted, we go into a low rate environment, but I was very bullish right after this call. But I did say my 50 was contingent on several things: couple of rate cuts, clarity on the tech platform. But I said that they are so set up for the future right now that I'm a reinvigorated bull.
I mean, hey, we love to have you back.
I mean, look, I was 1 foot out the door. Now I'm both feet in.
And you're still that way, even after, the last couple of weeks and everything, a little shakiness in the market.
Changed? Oh,
nothing, but
I know it's changed. It looks like we're getting Kevin Hass's freaking Fed share. That's what's changed.
I never thought anything changed even before whenever you were 1 foot out the door. So,
I mean, I wouldn't mind Michelle Bowman.
You're just picking Fed presidents now?
next year is going to be. I can't wait for Jerome Powell to go bye-bye. Can't wait.
Yeah.
I'm having a party.
Well, we're expected to truly hear the name. I'm pretty sure, by the way, the odds on but this is what I mean by prediction markets being a very weird thing. If we go to Kalshi Fed chair.
Yeah, Amit freaking brought this up the other day.
Yeah, it was like 82%. Yeah, Kevin Hassett 73%. It dropped by 12 points. Like, and then there's a small amount on Kevin Warsh. Maybe people thought that whenever he said thanks, Kevin, he was talking about Kevin Warsh.
Maybe. Yeah, because I mean, I would have thought Waller would have been up there more than freaking Warsh.
Yeah, but why would you bet on any of these?
Yeah, we don't listen. We don't want Percent as Fed president. We need Percent where he is.
No, I'm not even saying what we want.
You're not saying. I'm telling the prediction market.
He said, "Thanks, Kevin."
I know.
Also, the one great thing that I like about Kalshi over the other ones, you can actually earn interest on your open positions in idle cash. That's pretty friggin' competitive.
Yeah, I agree with the chat. I think Waller should be higher.
No, I agree.
And Waller would be a great Fed chair.
He definitely seems like he wants the job too. I mean, a lot of his commentary, that and Stephen Moran seem like they both have been talking like they want the job.
Yeah. I mean, look, you guys have to understand something. When I'm talking like this, it is truly because I hate the fact that they tinker with rates when they don't need to. And look, the situation that we got in could not have been avoided. Yes, Powell and the team at the Fed could have started increasing rates earlier. At the same time, we'll never know. Anybody who says that they know what would have happened, we don't know because it didn't happen. Their guess is as good as my guess. What we do know is they eventually got us to a no landing situation, which was the best outcome that we could have had. The problem is they kept it there and hid behind being data dependent instead of doing what needed to be done. And I think that they play with these rates too freaking much, and they don't let the free markets work themselves out. If there is a way for companies to make money because there's more demand than supply, companies will figure out a way to fill that void because there's money to be made. So we need to stop tinkering with these rates and care more about the damn employment market than anything else. Because I'll say it again, nobody is stopping spending money over 1% difference in inflation. If you're going and buying something next year for $102 or $103, that $1 is not stopping anything. Now, if we're talking about 20% inflation versus 2% inflation, different story. Mm-hmm. But anybody on the Fed that wants to have an argument or a discussion around the difference between 0.5% and 1% on a forward basis, I will have you on anytime. We can debate it. You're wrong. Period. Full stop. It's not stopping anybody. And we should not overlook unemployment going up to 4.4%. And it is on a trajectory to continue going up, especially as we get more productivity out of AI and robotics. And that is the number one reason why we should be lowering rates, because we need to make sure that we have a healthy job market, and that mainly comes from lending, because people build jobs and they build companies by taking on debt. Most people don't start businesses with cash that they've accumulated. Most companies tap the debt markets. So we have to incentivize people to continue to do that, especially when we're in a position where jobs are starting to freaking say bye-bye and unemployment is rising.
What do you think about Meta's, what was her name? Susan, the CFO, that was talking about how artificial intelligence is essentially doubling the productivity of their engineers. So they actually want to hire more because they're actually more efficient.
Music to my ears.
But do you think that that's going to be a trend where AI is not a replacer, but it's actually just like supercharging. So you'd actually, if you wanted to accelerate your business even faster, it'd just be like, okay, well,
I
now
think
the
it's gonna-
employees.
Look, it's going to supercharge a lot of people. But at the same time, do you need 1,000 engineers supercharged? That I don't know. Like, I don't know what the healthy mix is. So for the short term, maybe, but in the long term, I just don't know how much it's gonna. How I mean, they took the words out of my mouth. I mean, that's a perfect way to put it. The force multiplier rule. How much do you need of it? I don't know.
Yeah. I honestly, I find it way too early to call if AI is going to just be this, thing that takes all jobs. I know a lot of people are going immediately to that decision, but I haven't made my mind up on it yet.
Well, but it's not just AI. And when I say AI and robotics, I mean full self-driving also.
Mhm.
Just play it out. In 10 years from now,
I can't play it out.
okay,
I don't think it works like that.
I'll
I-
play it. I'll play it out then if you can. 10 years from now.
But you're making assumptions, and
I am making assumptions that in 10 years from now, we will legitimately have full self-driving.
okay.
And if we have full self-driving in 10 years from now, across the board, that means that there are a lot of jobs in the transportation industry that disappear.
Those jobs,
Yes.
but what if, like, the thing, and everyone hates to hear these things because it doesn't, like, they're not real right now, so it's hard to envision. But I've always thought it was weird that for Uber Eats that these ghost kitchens would cook and then they would be put into a cold bag, and then by the time that they arrive at my house, it's like leftovers. Like, it's not a great system. So how do we know that the future?
Why are you ordering from places that use ghost kitchens?
I don't know. It's fine food. But
You just said it's leftovers.
all delivery is leftovers.
Bullshit.
It stays cold.
I
and-
could order from the diner right now and it comes to my place piping hot.
What is it beside your house?
It's right
You're
down
in
the
New
road.
York City. It's everything is 5 minutes.
It's right down the road.
Yeah. So I get that. But anyway, who knows if there's not jobs that are essentially vans where, okay, it's self-driving, but we can cook the food in the back. Like, I'm just saying.
Yeah, they're just gonna freaking cook the food in the back.
Yeah, if road safety goes through the roof,
What if they hit
why
a
not?
bump? What if they hit
What?
a bump? What if
There
they hit
won't
a
be any
bump?
bumps. There will
Your
be no
soy
bumps.
sauce is gonna go all over the place.
There will be no bumps. The cars will dodge all it's
Soy
cameras.
sauce in your yeah, they're gonna dodge the bump. Soy sauce is gonna go in your mustache.
Here's what I'm trying to say. This, because that's always a ridiculous answer. But I always think to Salesforce, okay?
Yeah.
Could Salesforce have created a CRM that would fit all companies' needs and offer it as one general product? The answer is yes.
Yeah,
But-
absolutely.
But in order to compete against all the other companies that could do that, they said, we're going to get into ultra personalization and we're going to continue to hire thousands and thousands of employees to go out to businesses and say, hey, what does your business need? Let's help create a CRM together that fits your needs. Do you need storage here? Do you need additional tools? Do you want us to link these contacts together? Do you need a shared place where people can share file? Like, they build that CRM directly for you. Why is that? Well, because productivity got to an area where Salesforce didn't want to lose to their competitors, and they didn't want to sell a white labeled, copy and paste product. So I just think that AI is going to bring ultra personalization. It's not going to create as much automation as people think. I think that people are just their needs are just going to get super nitty gritty. And that's always what happens with technology. Is it not?
I have a different view on it.
Like Amazon mastered delivering products in 1 week, and then so did other companies. So what did they do? They brought it down to 3 days, and then other companies got there. So they brought it down to 2 days. Then they brought it to same day. Like, it just gets ultra compressed. So what I think is going to happen is there's going to be a lot of full self-driving.
The only company doing same day.
What?
Amazon's the only company doing same day.
I don't believe that.
Oh, who else can I get next day from?
Probably Walmart. I mean, let's be real.
You know what? Let's go to the website because I actually don't use Walmart. So let's say. What's like a normal freaking item that I can put in here?
I don't know. Deodorant.
Tide Pods.
Walmart can do same day too. Target. People are saying.
Delivery. Shipping arrives tomorrow, but it didn't even ask me for my zip code, and I have a freaking VPN on.
But so honestly, I think full self-driving will not be enough. Like, the amount of deliveries will pick up as ultra personalization. Like, hey, get your order in 45 minutes.
It looks like Walmart can do next day. Interesting. I actually did not know that.
According to this guy, Walmart does 1 hour delivery.
As soon as 1 hour is that.
Yeah, there you go. But if Amazon starts to replace their workers with full self-driving, and by the way, it's not a good enough product. I just saw DoorDash partner with Waymo. They said,
you can see the Waymo that drove through a freaking police standoff.
Yeah, it's hilarious. But with the DoorDash and Waymo thing, it'll like go curbside and then open up the trunk, and then your food's in the back of the trunk. I'm in Canada. It's snowing. I'm not like, I know this is the most first world thing ever, but I straight up would not pay the same price to have it at my curb than I would at my doorstep. It has to be at my doorstep. I'm not putting on snow boots and a coat to go get my food. If I wanted to do that, I would have went to the restaurant. I want convenience.
No, I'm with you. I'm not paying you to drop it off at the freaking end of the driveway. Like, you gotta drop it off the door. 100%.
So train your dog to go get it. She doesn't do anything. So I think that this whole idea of like they're replacing the workforce is too early. Why haven't we seen it yet? I haven't seen it. Everyone keeps calling for it. Next year, it's going to happen. Next year. Next year, they're going to say it's next year. And the year after that, they're going to say it's the next year. A bunch of jobs that don't need to be around are going to get replaced. And new ones will be created. There were a lot of gas pump. Steve, you probably had, even I think New Jersey still does it, right? Full, not self-service, but like full service gas stations.
Yeah, Jersey doesn't let you pump your own gas. New York, you can pump your own gas, but they still have full service at quite a few gas stations.
Yeah. And so that job is disappearing very quickly. Jersey's the only one holding it up still. But for the most part, self-serve is the thing. But no one complains about the job market because that job went away.
I mean, listen, it also becomes a thing of, in all seriousness, if full service and self-service was the same price, I'm doing full service. But if it's not the same price, I'm getting out of my car and pumping my own gas.
Honestly, I find that the price is not there. We have one full self or full service thing in the area. It's 2 cents more. I mean, it's nothing.
But it's not the money, obviously. It's the principle.
What?
Like, I can get out and pump my own gas. Like, if it's the same price, yeah, all right, fine. I'll do full service, whatever. But even if it's a penny difference, I'm getting out and pumping my own gas. Like,
yeah.
But I do think that there's a good use case for full service. Look, there's a lot of elderly people. I think full service is a good thing.
But that service should be allowed for people who want to pay more. There's always going to be human jobs where people want.
No, they should be tipping them. Is what they should be doing.
Yeah. But I also think, and no one, I keep harping on this point, but I really do believe it. You know what the number one new job in the last 20 years has been? I need to find this report again. I forget. I think it was
no idea.
So number 2 was oh man, I don't remember. It was consultants or something. Something
That
stupid.
does not surprise me. I feel like every other person these days is a freaking consultant.
Yeah, because no, you know what it was? Number 2 was compliance officers. That's what it was. That there were barely any compliance officers now. Compliance is everywhere because we create jobs out of nothing. And number 1 was manicurists.
No, hold on. We create rules and regulation out of nothing. Therefore, we need more compliance.
Right. And internal compliance officers.
Yes.
You know how stupid I find internal compliance? I remember whenever I was working.
Well, it depends what industry you're working in. If you're in healthcare, you need compliance officers.
No, I get that. But I was working on a financial thing. And then
it's for billing. There's a lot of things you need it for.
Yuck. Okay. I was in that field whenever I was a financial advisor, and then I would put in paperwork and they'd go, hey, you filled this out wrong. And I'd go, you know what I mean? Like, you're an internal compliance. You're on my team. Why are you stopping me? You're making the company less money. It just drives me nuts. But anyway, that's, I'm no longer there. I didn't get fired. I left. But what was I going to say? The number 1 job was manicurists and pedicurists. That was the number 1 new added job in the last 20 years. Not the most amount. It's the highest percent change. Okay. Same with compliance officers. Not the highest amount of new jobs. It's the highest percent change. Okay. Why do you think that is? We literally created these jobs out of nowhere. No one needs. I know this. Some of these girls that I've talked to in the past, and they'll tell you, they'll act like the most amount of disease, like bubonic plague, is under your cuticles. It's so funny. Like whenever you're a hammer, everything's a nail. It's so funny listening to these nail people tell you like, oh, you don't know what diseases you can get. I'm like, come on, babies suck on their thumbs. Let's get over it. Like, anyway, I'm getting off topic. I don't need to take care of these. And yet that has become a huge industry because people are in such a first world living right now that they take care of every inch of their body. And I think as time goes on, a lot more of that's going to happen. There's going to be more yogis, more personal trainers, more self-service. That's where a lot of human jobs, I think, are going to be. What's another industry? The elderly, completely left to their lonesome. I think the elderly is going to be a big industry that booms, and I think children as well. There's like 1 teacher per 30 kids. You don't think whenever the bus is self-driving, you think we're going to put an Optimus on that bus to monitor those kids? Those are going to be humans. Humans are going to monitor those kids on that bus. Am I out of my mind, Steve?
Yes.
You're looking at me like I'm doing a solo podcast here.
Yeah, you're out of I'm listening to you cook, and you're out of your mind.
All right. That's fair.
You're out of your mind. I mean, look, the elderly, long-term care facilities and skilled nursing facilities are going to experience a boom, in my opinion. But I think you're going to see robotics become huge in those industries. Optimus is going to become huge in those industries.
In what?
Patient care, patient handling, everything.
Maybe, but not on the kid side.
I'm not saying kids. I'm talking about long-term care facilities.
No, I know, but I think there's going to be a boom in youth too.
There very well could be a boom in youth, but on the patient handling, long-term care through skilled nursing, the amount of
honestly, it's an industry that people love to get out of their mind and not think about. The elderly are straight up forgotten.
What do you mean? I'm an investor in Omega Healthcare Investors. What are you talking about?
Dude, go to one of those places. it is a depression city, and their
Okay.
families don't go nearly enough. I mean, like,
I'm invested in one of the largest senior care and long-term, whatever. Anyway,
I hope they're doing well here, but in Canada, it's a drop-off facility.
listen, Omega's dividend's amazing. I've been writing articles about them for at least 4
Their
or 5 years.
their dividends might be great. I'm just saying.
Amazing.
I don't think North America takes care of their elderly nearly as well as
So,
other countries.
guys, hold on. Guys, in all seriousness, Optimus can't clean elderly diaper changing. Today, maybe, but in 5 years, he'll be able to. I mean, you got to think about it. There's a lot of jobs that people really don't want to do. And when you think about workman's comp claims and you think about where strains happen, robotics is going to change the game for that. Also, companionship with elderly. There's a lot of things that are going to happen in the next 5 to 10 years that I think people are going to be really surprised about. Like, trust me, I see all sorts of claims all the time. Patient handling's a big thing. Freaking, you just go read don't take my word for it. Do 20 minutes worth of research on Google, look at top trending workman comp claims, look into it. You're going to see a lot of this come down because of robotics.
Yeah, no, I also think that's true too. Like, my brother owns a plumbing company, and I feel like he's paying the government in some of these insurance things as much as he's paying the actual salaries. Like, it's insane, the cost of new employees. So if you can get like a robot to do some of those jobs, it is enticing.
Yeah, look, humans are not going to be freaking stacking things in warehouses and carrying things in warehouses.
Mm-hmm.
Slip, strips, and falls is a huge leader for workman's comp claims. That's going to be not done with, but seriously compressed. And for people saying that the elderly don't want that, there is a chance. I'm not going to say
you don't have a choice,
but there's a chance in the next 10 to 20 years, we have robotic surgeons. There's a real chance of that. Healthcare is going to undergo such a crazy change that may become the norm in 2040, 2045.
Tannor gets his pipes cleaned for free. It is very true. I've not paid for a single plumbing thing in this house, and I've got all brand new appliances.
I mean, guys, in all seriously, go look at Intuitive Surgical. They've had the Da Vinci machine for God knows how long. Laparoscopic surgeries have been happening for quite some time. In the age of AI and technology just advancing so much every year, you can't tell me that in 15 years from now, you're not going to have unmanned surgical procedures. We may even have in the next couple of years. Like, open your brains and just think about the realities that could happen. Like, think about what we have today, how quickly technology advances, and what the possibilities are. Like, those are legit possibilities.
The speed of technological advancement is accelerating.
Moore's law is shattered. It's shattered.
So that's the one thing where Kathy Wood's just been bang on is,
100%.
Usually we see one large technological advancement at a time. Right now we're maybe at 5 or 6. Like it, and then people want to stop investing in tech and go to retail names or something. I'm just like, come on.
Yeah, and think about it. With where Optimus's hands are right now, you're telling me in 10 years from now they're not going to be good enough for anything with patient handling? Like, come on. I'm not buying it. I think it's going to be a game changer. And I do think that robotics is going to be one of the biggest stories in healthcare. We'll see. We can date this. We can timestamp it. Come back in 10 years and say.
No, I'm sure you're right, but
I could be wrong. But I mean,
I'm very excited for the future.
I mean, the one thing that we can agree on that nobody can dispute is technology does not remain stagnant. and it is always advancing. Now, the rate of what it is of how it is advancing, we can disagree and bicker about. But yeah, that's a good point. Do I think that Intuitive Surgical would just make their own humanoid robots? That's a good possibility, guys. Or they may do a partnership with Optimus to create surgeon droids. That can happen in 15 or 20 years.
We'll see. I don't know much about specifically in the healthcare space or what's going to happen there, but I find that oftentimes, even with computers, there's a lot of room for automation, and it's still done manually by humans.
So,
and I think people like to go to like, okay, well, what's the absolute most bullish case? And they don't like to go to, okay, well, most entrepreneurs end up finding Band-Aid solutions because that's not the growth vector. Not everything needs to be automated today. We need to get more customers and more growth, so then we can go to VCs and then raise more money. Yeah. Jonathan, brother, chill. Thank you so much. I think that's Intuitive Surgical's ticker, is it not? ISRG for the community port?
ISRG, yeah. So somebody said something, and I wanted to bring it up. Oh, here we go. So that's fine with surgery, but come on, you really want a robot giving companionship of your mom and dad? Yes, I do. Here's why. When Optimus comes out for commercial use, I am either buying one for my parents or my parents are buying one for themselves. One way it's happening. And here's why. I don't want my parents lifting a case of water or trying to lift a case of water. I don't want my parents having to waste their time freaking opening a case of water in the trunk and having to take 4 bottles out at a time to carry it in the freaking house. Like, I don't want them going up and down the stairs to have to do laundry. Like, I want them to have a freaking Optimus that they can talk to, that can do the chores that they are just struggling with. Yeah,
plus,
I do.
Optimus is not going to steal my dad's watch. Okay. I think elderly people are taken advantage of.
But besides the point, like, there's a lot of things I just don't want my parents doing that an Optimus robot would be perfect for. I mean, seriously. Like, why are we trying to say that having an Optimus robot do the dishes for you and unload the dishwasher, doing the laundry, folding the laundry, carrying things that are heavy, unloading the car, unloading the groceries, why is that a bad thing? Like, for elderly people, that's a great asset to have. Cleaning the house, everything. I mean,
order yours now.
They can't listen. They can't come soon enough.
Do you really want a robot with 24/7 camera and microphone recording everything? Dude, I'm actively recording myself right now, but you're carrying your phone around.
Hold on. You carry a cell phone around with a camera and a microphone.
Yeah.
Like, what are you worried about?
Always. And then you go, oh, well, your iPhone's not recording. And it's like,
okay.
Yeah, neither will the Optimus. It'll be made by the same companies.
Right. Okay. Yeah,
robots can wipe my ass. I mean, they might. I do think that jobs like that, like, I don't think there's many garbage people that like garbage men that want to be garbage men. I'm sure Optimus would love to take the trash out. They'd love to pick up city garbage, clean sewers.
Listen, believe it or not, I think more people don't mind it than you would think. And I'm thinking about it as they probably love being outside. They get a workout in. Now, it probably sucks in the rain and it sucks in the snow.
I'm not saying it's a bad gig. People are saying it's a bad. I'm saying they are compensated well. So maybe they're happy doing that, but it's not going to be high compensation if you're if the alternative is a robot. the take would go down. I don't know how many people like it. If they do, I'm not here to bash garbage men. I'm just saying that, the jobs that you will do in the future will be ones that you most likely will want to do.
Yeah, and on the whole camera thing, think about people having cameras around their property or even inside their house. I mean, come on. People have Alexa in their house. So the whole idea of privacy is gone with.
Yeah.
So I'm full blown on the train with this whole Optimus and robotics. I think it's a net benefit for many people, and I can't wait. I am so stoked about it. They cannot come quick enough.
Yeah, but you know what? This is the problem with the whole idea that garbage men love their jobs. Garbage men in Chicago make 6 figures. Why do you think that is? Why do you think they're being paid so much?
Because it's a tough job.
It's because no one wants to do it.
That too.
Yeah. Like, I don't know. It's not that tough of a job.
No. When I say tough job,
McDonald's is a tough job.
No. Hold on. When I say tough job, I'm not talking about a mental capacity for running formulas and being an accountant or whatever. It's a tough physical job. I mean, that takes a toll on your body.
There's a lot of tough physical jobs that don't make 6 figures.
I'm not saying there aren't. I'm just saying it's a tough physical job.
I get that. But the reason why it's so expensive is because no one wants to deal with smelly garbage all the time.
And I'm not saying you're wrong. I am just simply saying that it is a tough job on your body. That's all.
I agree. I'm not anti that. They say I can't fill up those bags more than 40 pounds. I mean, I've probably sent out a few that are 45.
I mean, it depends on how strong the bag is. I mean, are you really weighing your bag? I'm not.
No, but you probably pick up a 40-pound bag, or you probably pick it up thinking it's 40 pounds. It's probably 95 pounds. You can't even tell the difference.
I mean, I would say there's some people like that.
Some people like you.
Maybe.
But what was I gonna say? Yeah, they've never complained. I've never had a bag stay there and they go, oh, it's overweight. They always take it. I'm happy. Like, people are thinking like I'm anti-garbage man. I'm just saying Optimus will do that for less than 100K. That's
Yeah, I can't wait for freaking Optimus.
Pick whatever job title you guys want. You guys are making it out like I'm like everyone's like defending garbage people like I'm anti-garbage man. I'm not. Miners, yeah, you can talk about miners. Like that's a dangerous job.
Oh yeah, miners is completely dangerous. And got news for everybody. That's a job that Optimus can do, and now we won't have black lung anymore, and we won't have all the medical issues. I mean, do we really want people down in mine shafts breathing that all day?
Sergio's acting like because I haven't worked a hard job that I can't, like, it's just a thing of economics, Anyway, I'm all right. I'm done.
Tanner, you know what's crazy?
What?
I just hit 40,000 people on freaking Seeking Alpha. I didn't even know that till now.
Congratulations, brother. That's huge. You must be literally one of the biggest people on, sorry, real quick. You must be seriously one of the biggest people on Seeking Alpha. People are saying I'm contradicting myself. Optimus is going to take current jobs, but I don't think that unemployment, just because current jobs are taken, that means that those people will not find new jobs. I think that the jobs market will be stable, or maybe a slight increase in the short term, but go back to normal. But that doesn't mean that current jobs have to exist. I'm not contradicting myself. I don't necessarily think that there has to be garbage people, but maybe there's some sort of new service instead. Sorry, Steve.
No, go ahead.
No. I want to celebrate.
No, it's no celebration. I did not know I was over 40,000.
Who is the biggest Seeking Alpha? Or how big is the biggest Seeking Alpha account? It must not be too much further than that. Like, what is it, 80K?
I shouldn't say this publicly, but I'm going to. I don't read anybody's articles on Seeking Alpha.
That's fine.
I don't have the time, not because I don't want to, I don't have the time. Brad Thomas, I used to read a lot of his stuff. I don't have time. He's got to be the biggest person if he's even still on there. Has to be. Or Rita Morva. One of those two have to be the biggest. I wouldn't be surprised if they have over. And Brad Thomas, is he still on here?
Rita Morwa.
Yeah, Brad's still on here. Brad's got 119,000 followers. I mean, if you want, like, he's the REIT king. If you're interested in REITs, Brad Thomas, he's the best, in my opinion.
Reed Mora has 124,000.
Yeah, he specializes in high income. Like, that's pretty much all he writes about.
Okay, but those literally must be the biggest accounts.
Those are the two biggest, hands down. Like, I don't think Seeking Alpha has a thing where you can see how many everybody's following.
I mean, it is crazy that you have a 40,000 following on Seeking Alpha on something that is a $300 a year subscription platform.
There's a lot of people that are on Seeking Alpha. Like, I don't think people realize how big of a website Seeking Alpha is.
I agree.
Like, you do, but I'm just saying, like, in general, I don't think people
still,
realize.
like, I'm on a free YouTube, and you're like, we're almost at the same like followers. It's pretty nuts. On a $300 a month platform.
On a $300 a month platform.
Sergio at the 10 gifted.
Sergio, thank you so much. Appreciate it. The good thing about Seeking Alpha is, in all seriousness, I know Fiscal AI is awesome, but you can get a lot of different opinions for people that there's still people that I recognize, even though I really don't read the articles anymore. There's a lot of people I recognize that still write on here and do really quality research. And the actual breaking news and everything on Seeking Alpha is really good. And they do a lot of good stuff on here. It is a very well put together site.
Yeah.
300 a year, not 300 a month. It's like 20 or 30 bucks a month.
Yeah. Tanner, you should do a guest post on Seeking Alpha for Steve. One, I've tried writing one article. I sent it to Steve to draft it for me, and he called. Like, I sent him a text, and then he called me, and he said, "You didn't submit this, did you?" And I said, "I did." He said, "Oh, dude." He said, "They're not going to accept this." And I was like, "Well, I just wanted to talk about SoFi's products." He's like, "There's like, you have to write like a full thesis." And I was like, "Well, I don't want to write a full thesis. I just want to tell you about this particular part of the investment." He's like, "Well, they don't want to, they wouldn't take that." No. And they didn't. They said, "Hey, we're not having it."
I mean, look, I've written, I think I've written, hold on.
One, I am not a writer. And then two, like, at the time I was only talking about a few names. So
I've written 1,420 articles on here. Okay. And I started writing on this site on 2018, well before AI. Okay. So all the editors know I am not using freaking AI or any of that stuff. I was writing for 5 years on the site before AI came out. Now, there is a problem with newer people submitting stuff and just trying to do certain queries and copy and paste to build an article. Once in a blue moon, I'll get comments from an editor saying, "Hey, could you add this?" or "Hey, could you do this for us?" Like, even I, having written over 1,000 articles, will still sometimes have people say, "Could you add a section on this?" or "Could you change this?" So they're very strict.
Yeah, I honestly, because it's not that They didn't like my research or anything like that. They just wanted a full thesis on SoFi. And if you guys see the way that I upload videos is like, hey, this is what's new about SoFi. Let's do an update on this new piece. They won't have that on Seeking Alpha.
No,
Like,
they
I
want
can't-
full circle.
I can't just talk about the loan platform business. They want to
No.
know like a price target and like full fee. And I just wanted to make an article about the loan platform business and how impactful that is. It's not really how it works.
Yeah, and even if you don't give a price target, they want you to build a analysis based on financials as to why you're either bullish or neutral or bearish. And they actually want certain things. It's not easy. Once you get in a rhythm of doing it, it becomes easy. But starting out, it's not. I mean, I have a friend who is a CPA that they gave a very hard time to, and he's incredibly smart. And they would not publish what he wrote.
Yeah. But it's a good platform. I pay for it.
Yeah, I think it's a good platform.
Yeah.
So what are we buying, Tannor?
Meta, Amazon.
Okay. I want to kill it in 11, just to let you know.
Yeah, I didn't even holy crap.
Yeah, 11 o'clock, because I got a few things I got to do before I go to sleep.
Okay. Meta, Amazon, BMNR, Chime, maybe some Shift 4. What else? Nebius. I've been buying Nebius. I think that's it right now, unless I'm missing something. What about you?
So I bought more Verizon. I bought more BMNR. I bought more QXO. I am going to buy more Amazon and Microsoft. I would like to acquire more NVIDIA if it falls. I don't think it's falling further than here. And I am interested in Nebius and CoreWeave. I have not pulled the trigger yet.
Yeah, I've not pulled the trigger on CoreWeave, and I'm not buying Google here.
No, I have an article coming out tomorrow downgrading Google. I went
Yeah,
from
Steve, you didn't say Hood. You should have said Hood.
because I'm not buying Hood here.
You
But
should have.
I am I went from being the biggest cheerleader of Alphabet to now just hold it and chill. This is not the easy money's been made. The time to buy Alphabet was when we convinced Tannor to buy Alphabet, not now.
It's true.
No, but seriously, you bought it what, 150, 160?
Yeah, well, I saw it sort of in the 150s, 160s. Then it went to 140, and I was buying in that sort of
Right. So that, like I said, that was the time to buy. It's funny how everybody wants to buy at 300, and it's the greatest company in the world at 300. What the hell has changed in 4 months? Not a damn thing except the antitrust suit.
Well, I even liked it in the early 200s. I was buying it there too, but you know, you go up from 200 to 300. You're like, yeah, that's an extra 50% on top of your original investment.
Yeah.
It's a lot. Really
I
quick,
mean-
Paul, thank you for the gifted subscription, brother. Really appreciate that. But I don't even think Paul's a member himself.
In my opinion, Meta is the new Alphabet right now. Meta is so disrespected that is the new Meta. Don't be surprised. New Alphabet. Do not be surprised after Q4 earnings if Meta goes back to 750. Do not be surprised.
Well, do you think that it could continue to fall?
Absolutely.
Because I don't think the CapEx, like the reason why they sold it off,
No, the reason why it continued to stay sold off was CapEx. That's not why.
But why did
originally
it sell off in the
sold
first place?
because there was a huge miss on EPS the second the earnings came out.
Yeah, but people understood that.
No, they didn't.
You think people reading the ticker right now that are not investing don't understand?
You didn't hear what I said. What I said is the CapEx is what kept it sold off. What
Sure.
made it sell off immediately was a $5.66 miss on EPS on the headline, because that was done the second it hit the ticker, before anybody opened the press release or waited for the earnings call to happen to understand it was a one-time non-cash impairment that caused that. That would never happen again. So then Zuckerberg getting on the call and saying that they don't exactly know what they're going to use all the chips for did not help the fucking case.
I agree, but do you think that's going to change in Q4? Like, I mean, there's not going to be a one-time tax hit, but the CapEx is only going to worsen.
So I think Zuck has the ability on Q4 earnings call to come out and say, listen, I sat down, like, this is what I would do if I was Zuck, okay? And I am not Zuck, so don't think he's going to do this. He's not going to do this. I'm just saying what I would do. You know, Huck Tan, guy's a board member. I sat down with him, showed me what his chips can do. Called Sindar. Said, Sindar, tell me about the TPUs. And
You think Mark Zuckerberg should do this?
I did. And then, you know, the three of us went out to dinner and we started talking. Because I'm assuming that Zuckerberg could talk like that, right? And then say something along the lines of, then decided that we're going to put some TPUs from Broadcom in the data centers. We're going to augment the NVIDIA chips. And we're now going to be able to go into maintenance mode and just kind of keep CapEx where it is. And then watch cash from operations explode in the next year. You watch how fucking quick the stock goes up. And then, you know what? This Reality Labs thing, we're done with it. If he says we're done with Reality Labs, stock's going to 1,000.
Oh, man, I hope they're not done with it.
I don't want them to be done with it. I'm just telling you what's going to happen if he says that.
Yeah.
I like this Zuck. I like this Zuck.
Mark's going to spend more money at earnings. Yeah. They're going to continue to invest in chips, and I don't know if the concerns around that, because it's all internal spend for Meta, right? Like whenever Google and Amazon and Microsoft do it, people just go, oh, well, they have a cloud business. But Meta, that's just internal spend on data centers that, for the most part, have not even come online yet. So
they are utilizing it for their models and for their algorithms. There is a use case for it.
I'm just saying Prometheus, Hyperion, the three other Titan clusters, none of them are online.
I get it.
You know?
The reality is that they're doing it from profitability. They're not doing anything that is hurting the business. And they've earned the right to try this, and they've earned the right to do this. And he's built one of the greatest companies ever in history. And he is not putting shareholders in a bad position from doing this. So as a shareholder, I'm fine with it.
I'm fine with it as well. But I'm also fine with the payment companies and Duolingo and all of those names as well. But the market sees a different story.
You haven't changed your mind on Duolingo?
What? Like I'm not bullish, but they are growing.
No, I'm just saying, are you a shareholder?
No.
Oh, I thought you were. Oh, Chris is, and everybody else.
Yeah,
is.
Chris is. I've never purchased a share, but
I think that they're out of their minds with this company, but that's just me.
Okay, we have all of 30 seconds to get you out of here.
All right. Oh no, final thoughts?
Those were my final thoughts.
Meta or NVIDIA, what would you rather buy here?
I mean, I would prefer to buy NVIDIA, but I'm buying Meta here because I have all my NVIDIA that I need. but
And we're-
I have higher conviction in NVIDIA going forward.
And we're going to leave it at that, ladies and gentlemen. Thank you so much for joining us. Use Tanner's fiscal AI code. He will greatly appreciate it. I will look into a Seeking Alpha code. I've never even thought about it, but maybe I should. We'll think about it. We will be back together on Friday night for the Fintech Friday, Fintech Frenzy, whatever you want to call it. Got a million different names. The Tanner Don't Be Late to His Own Show podcast, you know.
I was here. It was still
No, I'm waiting for Friday.
but it was 9 o'clock whenever I joined.
You were not late.
Sweet.
You
All
were
right.
not late. We're going to show his link once again. Thank you very much.
Gosh.
Praz, appreciate it. And on Friday, if SOFI gets into the S&P 500, I will figure out a surprise for everybody.
If Parsifal Zero, by the way, is in your chat, make sure you mod him. He's an absolute gem.
I don't have YouTube open.
I'll send you a DM, but
Okay.
he's an actual gem.
I will mod him at another time.
Cool.
All right, everybody. We're signing off. Have a great night, and we will see everybody on Friday. Tanner will be on tomorrow afternoon at what time?
Noon.
Tanner will be on at noon tomorrow, and I will be on sometime after 5 or 6 p.m. when Amit's done. So,
EST. Yeah.
EST. Have a good night, everybody.